see we're up at the top of the range here, 914. Spoos are trading 914. We're up about 5.5 for the day. We were at 908 as the clock turned here on the Pacific. Overnight, we were up on the earnings of Intel. You can see again yesterday we said this range would be tough. We broke out of it into the close, and lo and behold, baby, the gap continues. So when they reopened here, we were already trading up there around 908. So big gap up after the 15-minute close yesterday on the Intel numbers. We haven't seen a gap like this in a while, so good to see some gaps. We are now going to take a look at a little bit bigger chart. Yesterday we had talked a little bit about where we are in the context. I said last week we were going to get this failed so-called head and shoulders pattern come to fruition, and it has very nicely. We are pushing right up here to the 50% retrace, and that area is 918, and then above that you get the 61.8 at 926. You can see here. So we're coming into what I would call major resistance areas, and I'm going to remove a few of these older fib lines that are lying on our charts here, and you'll see that again, when everybody is leaning as they were on this obvious head and shoulders, and that's why I don't trade patterns like that. They're fool's game patterns like that, especially when talking heads. I mean, everybody's a technician. Anybody can see a possible head and shoulders, and that's why they generally are useless patterns to trade with. Especially on an index like this that we're talking about. So keep this in mind. I'm just, again, removing a few areas up in here. So on the big chart here we are. You're looking at a 30-minute, 30-day chart. Here's your key area, and I'm going to draw it right here with a little oval. But basically, we're coming up into this area right in here. This is going to be the battle line to me. This is, if you want to put on a short, this is the area right up in here. 918 to 926. This is prime, low risk. You can put it up in here and risk up to this 936 area. That's the 76.8 area. So I would be shorting heavily to the top of that area, 926 on a swing trade, and I would stop on any close over here at 938. So you're risking about 10 points or about 1% on a swing type trade. A pretty low risk trade, especially after we've run already 50 plus points. We are up over 4.5% now in the last 2 days. Again, on Sunday we were trading right here at 865. There's nothing out here but a massive short squeeze. This has been a massive short squeeze, low volume. You can see it here in the stochastics. We've had high, low, low. So we're getting lower pushes on every price move higher here, which is a divergence. Not a good sign for the bulls. We've had very low volume here. I would be very wary, just as I was as we were trying to break that head and shoulders again right in here. When we were breaking down here at 870. Again, we had to close under 870. We never did close under it, so that was a failed pattern. It sucked in all the amateur bears. Beautifully played by the market makers down there. And they've just rammed it straight up there, you know what, the last 3 days. Today is day 3. Again, Sunday we were trading here at 865 on this, beautiful double bottom pattern. Now everybody's going to be saying, well, again, we're coming up here. If you want to put on a short, it hasn't been yesterday. It may be today if we can get up into this area on a swing type position again. In this area, good area to sell, and again, depending on how aggressive you are, you would either put your stop here somewhere above a close of 938, or you could put it all the way up to the high, depending on your risk tolerance. Obviously, 25 points is 2.5% if you go all the way up there. If you're selling here at 925, 927, and then you're stopping over 952 on a closing position. So that's where you're looking at on a big picture. Let's go to a day chart again. Go back to the one-day chart. Again, we are bullish right now. Pivot is down around 904s, so we're well above the pivot again this morning. You want to get short if we get below that 902. Otherwise, again, look for R1 is 917. That's first resistance point. See how that handles it. Again, I'd wait for the first half hour, see if there's any follow through in this market. R2 then is 925. So 925 would be a great area. Again, nice number on the big long-term picture chart, And the 10-minute chart here, you can see again, we've bounced nicely here pre-market at 5 o'clock on the first on the econ numbers there that we had, which I believe inflation showed inflation up. So we've got inflation up basically based on oil, just like retail sales were up yesterday, basically based on oil. We've got Empire State Manufacturing came out. We've got what else do we have today? We've got crude. That's about it. And then the FOMC minutes later this afternoon. So pretty quiet again on the news front, economic news front, and earnings are out there. And again, big gap up again this morning, up 12, but this happened pretty much yesterday on the Intel news. We've gone up maybe another 5, 6 since then. So let's watch this first half hour, see how it trades. And again, I'd love to get short up into that 925 area. We're trading 914. I'm really not chasing this on the long side. It's just too much of a gap for my taste. Again, you got a lot of support here, 908. Anything below 908 probably right now will fill this gap to 902. So keep that in mind and have a great trading day today. Be careful out there. Again, it is mid-July. The trading was very thin yesterday, volume very light. Again, volume is very light. So I take all of this big bullish move here with a grain of salt, but respect it. And we were on for a good piece of the ride on Monday. Yesterday we picked up another 0.5% or so in SPOO points, which wasn't bad. In one trade we picked up about 4.5 points. So that's it. Today we'll be watching it. If you want to join our premium chat, call Eric 888-201-4201. Peace.